in a little bit into our portfolio. And when we look at our fund, for example, are there any stocks that stand out in terms of performance the past weeks? And if so, which ones and why?
On a year-to-date basis, we look across our portfolio. Some of our top performers are, again, Tesla. Another one is Citrix Systems, which is a company that provides remote login solutions. I'm sure everybody knows that one. Netflix is a top performer, as everybody's really been streaming from at home, not going to the movies, and bringing the movies to your home screen. Shopify is one of the benefactors in our portfolio. They are essentially an e-commerce enabler. Amazon is a big winner. Nvidia is a big winner. Another company that we haven't spoken about is Atlassian. That is a top performer year to date as well. They produce collaboration software such as Jira or Trello and others. And also a pharma company, a lot of pharma companies actually in the top performers. One of them is Eli Lilly. That is also in the news every now and then because it's one of the leading players in the sort of the hunt for this vaccine or a solution to the general coronavirus problem.
What often meets the eye is only kind of the interface, but we never see the technologies behind those great solutions that you just mentioned. So if we look at sectors, for example, which Singularity sectors stand out in this context?
Really glancing across the portfolio, the top performer in terms of Singularity sectors has been new energy. Now that is biased by the stunning results of Tesla, but also companies like Neste Oy, the Finnish renewable energy company, has performed quite well year to date and has actually massively outperformed its peers in the energy space. The runner-up is virtual reality. That has benefited strongly from gaming entertainment, but also in general the semiconductor sector, followed by big data. Big data has a lot of exposure to, or in our portfolio has a lot of exposure to healthcare and the tech software infrastructure businesses, and those are sectors and companies that have to some extent benefited from the crisis or have not suffered from this crisis. And lastly, neuroscience and bioinformatics companies, which are, as the name would suggest, concentrated in the healthcare space, are doing very well year to date.
One of the questions that has come up in the past weeks over and over again was what we would do in this situation and what we would change or what we would adapt and how we react to the situation. And I think our answer to that has been, we carry on and we just stick to our strategy because our portfolio is kind of built for resilience. Would you agree, and why?
We don't try to, time the short-term cycles of the market. We really try to invest for the long term and identify companies that can benefit from the underlying technologies. And so therefore, we're quite happy to see also that the portfolio has performed relatively well into the crisis. It hasn't corrected as much, and when we look at the companies and the performance sector by sector, also by traditional sector, and compare it with, for example, the MSCI World, the companies that we have in these sectors have outperformed the companies in the benchmark traditionally, and so that's good to see. I guess another question that a lot of people often ask is, like, okay, so which Singularity sector would you go for right now? And my answer to that would be I wouldn't go for any particular one at this point in time. I think the really interesting stuff is to be invested in all of them because they really work together in concert.
Do we as a company expect the market to further drop or to stabilize? And does it matter at all?
Yeah, it's the $1 million question, isn't it? I think we all have an opinion on this, but nobody knows. I think it's well possible that that will take another nosedive. Whether we will see the lows of March again is questionable. I personally don't think we're going to go as low as that. I certainly can imagine that we could have another 20% correction from these levels. However, I don't think we should be in the business of, micro timing the market. I think, and as we wrote in our blog post on the 24th of March, we think it makes sense to get into the market when it has dropped more than 20% with a staggered approach. And we still think that advice is good advice. So we would really deploy capital in the markets over the next 9 to 12 months, be that on a monthly basis, quarterly basis, or more opportunistic, trying to buy perhaps dips, but really also not forgetting to deploy some capital, because the fear of missing out can be as painful as the sell-off itself.
If you have the luxury of having some cash on the side in this situation, there certainly are some pockets where you might want to invest. I would recommend a very selective approach when it comes to quality. And for us, quality meaning that companies should be able to demonstrate that they're able to benefit from this situation, that they're innovative enough to survive scenarios like this. And the good thing about a situation like this is it helps people understand again which business models really work and were positioned for the long term, and which ones haven't.
On a very personal note, have you bought back into the market?
I doubled down actually on the fund in hindsight at a very good time so far, and my approach is to add again should things get worse. But I definitely feel a little relieved to be somewhat exposed to what I think is a portfolio. I bought into the fund a portfolio of companies that not only should survive, but should also benefit from future innovations and technologies, and are positioned for that. I doubled down on an NVIDIA that was already a small part of a single stock portfolio. That's just because in this market situation, actually everything corrected, even quality got a hit. And there's not very often in life as an investor that you get the opportunity to buy high quality companies that are mispriced by an overreaction in the markets.